Welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. Don't be fooled by the color of her attire. The markets went exactly in the opposite direction. A 2.4% cut on the Sensex and the Nifty over yesterday's cut as well. The mid-cap index losing about 1.5%. The markets spooked a little bit by global environment. The US stocks were down. US yields were up, and that always is a negative for most risk assets like Indian equities and emerging market equities. More importantly, the fact that the GST bill is jacked has certainly disappointed foreign investors, or so it seems. Not a good day.
Not a good day, Lata. And I know the color of my clothing will do nothing to alleviate the pain, especially for those who had long positions going in the market after that 2 days rally. Well, we've got plenty of ground to cover. Let's start with the headlines. Weak global cues prompt the bears to make a stunning comeback on Dalal Street. Benchmark indices dropped 2.4% with the Nifty suffering a 200-point fall to end around 8120. It's a 650-point cut for the Sensex as that index clips below 27,000. All sectoral indices end negative with bank stocks leading the fall.
The mid-cap index falls 1.6%, a small blessing, better than the benchmark indexes. Construction stocks like HCC and Gammon, infra stocks, other infra stocks fall 6 to 7% on heavy volumes. Motherson Sumi, after good numbers, ends down 5%. Like I told you, despite steady Q4 results, Gujarat Gas bucks the trend, rising another 7% after yesterday's 10% gain.
Dr. Reddys, however, beats the market blues after reporting a better than expected 11% growth in revenues. Operational performance remains steady as well. However, profit misses the mark because of a forex loss. The stock ends over 3% higher.
Mixed trends from the mid-cap PSU Banks space. UCO Bank tumbles 8% after gross NPAs rise to 6.7%. Central Bank of India continues to report slightly weak asset quality numbers and a rise in provisions. Union Bank's NPAs are high but are contained at previous quarter's levels, just below the 5% mark in the fourth quarter. That stock rises. Vijaya Bank also reports a marginal improvement in asset quality. Both those stocks gain 2%. Well, those are some of the headlines from the markets, and here are the experts that we have lined up for you today. As part of our exclusive series, Asian Tigers, we will get you Ajay Kapoor of Bank of America Merrill Lynch. He's, of course, reading the Indian markets trends for you. Prabodh Agarwal of IIFL Institutional Equities will also join in with his take on what's driving the markets lower at the moment. We'll get you the managements of some of the companies like Union Bank, Dr. Reddys and others to talk about their quarterly numbers. All that coming up in the next half hour. But first, Dalal Street.
Absolutely, and the mayhem that we yet again saw, the volatility coming back, and the seesaw really continued on the street. Weak global cues and a sell-off in global bond markets have ensured that both the Sensex and the Nifty have given up all of the gains that they posted on Monday. We have Sonia now joining in with a complete wrap of what really transpired today. Sonia.
Oh, indeed. You know, the last 2 days, the rally that we saw is something that we call a sucker's rally. So it flattered to deceive completely. And today we saw a big sell-off in the market. Sensex was down 629 points. The Nifty gave up on that 8150 level. So a lot of crucial levels were taken out. And there were a couple of factors for that. One, it's a global risk-off in equities that we're seeing. There is a shift to risk-free US bonds that we're noticing. The US bond yields, in fact, rallied all the way up to that 3% mark, and that spooked to global investors, including investors in India. Not just that, locally as well, the sentiment was quite sour after the non-passage of GST and the land bill. So over there, things continue to remain quite sticky, and that really led to huge unwinding pressure in the market and in specific pockets like banks and high beta stocks. In fact, the bank Nifty was down 3% today, and not just banks, a lot of blue chip names, you know, the likes of L&T, Reliance, and from the banking pack, ICICI Bank sold off quite a bit. So don't be surprised to see a big sell figure from the FIIs tomorrow. In terms of the big losers, banks, of course, topped that list. So Bank of Baroda quickly unwound what it gained yesterday. PNB, ICICI Bank and Axis Bank. But it was a secular rally. So you had metals, capital goods, cement that were all under pressure. Names like Tata Steel, Vedanta, Hindalco, BHEL, L&T, Ambuja Cement, ACC were all big losers in trade today. On the gaining side, you had stocks few and far between. So just to Dr. Reddys, after reporting a good set of numbers, was higher in trade, and Hero MotoCorp bucked the trend today. So that stock was higher by about 2% or so. But mid-caps cracked as well, and any whiff of bad news in terms of weak earnings was completely trashed. So look at the stocks here. Phenolics Cables, disappointing earnings under pressure. UCO Bank, disappointing earnings there. Adani Power, all three stocks reported weak earnings, and stocks were down about 7 to 8%. Then you had names like HDIL, HCC, IDBI Bank, Indiabulls Real Estate, all these stocks under pressure. Most experts believe that the worst is not over. It could continue to be a very volatile phase, and only if we cross that hump of 85.20 to 85.50, then one can safely say that the uptrend has resumed. Till then, more volatility in stock.
Thanks a lot for that, Sonia. Yes, fasten your seatbelts, brace yourself for volatility. Actually, a good index to look at would be the VIX, since we are speaking of volatility. The India VIX stands even today gaining about 10% and standing at about 20.5, as you can see. Let's pull up a 1 week of this chart. Even on the days when you saw the stock markets rise, like on Monday and Tuesday, Friday and Monday rather, Tuesday is a bad day. Friday and Monday, you don't see the VIX falling off much. It is still staying at about 17 levels. The point I'm making is that people were not fooled by the rise in the stock prices. Normally when stock prices rise, volatility should fall, the VIX should have fallen. But the fact that it remained at an elevated level, well above 16.5, 17, indicates that people were only trying to buy hedges when the markets rose. Well, just a word more today itself, the bank stocks were among the leaders in the fall. They fell the fastest. The bank Nifty itself has fallen 3.14%, but the bank Nifty is actually heavily weighted 90% in favor of private sector banks. ICICI Bank, yes, it fell about 5%, and that was a big contribution in the fall. Okay, 4.75%. But look at the PSU Bank index. That fell much sharper, actually, and that index, I think, has fallen over 4%, the PSU Bank index. There it is 3.69%, and there are some very tall losers, notably Bank of Baroda, which, as Sonia said, was a typical suckers rally yesterday. 17% higher, lost 7% today. And then, of course, bad numbers from UCO. Okay, bad numbers from Central Bank as well, pulled down all those stocks. And in the course of Bank of Baroda falling, you also saw profit taking coming in the likes of PNB. So PSU banks were very big losers. The small island of outperformance, if you please, were the FMCG stocks. You saw a little bit of Dabur, Godrej Consumer, Pidilite, Marico, all these stocks ending somewhat in the green. Not a whole lot, but of the lot, that 1 and 2% gains that we saw were in the FMCG space.
Okay, well, that was the market today. Lata, let's quickly move on and get some opinion going, and let's get on to our special coverage, Asian Tigers, just ahead of Prime Minister Narendra Modi's maiden China visit. Now, Ajay Kapoor of Bank of America Merrill Lynch maintains that he has been overweight on India since September 2013. That's since his good friend Raghuram Rajan was appointed the RBI governor. This is that.
I've been overweight in India since September of 2013 when my old classmate and friend Raghu took over the central bank. And, I think India has a lot going for it. One is, I think the quality of leadership is excellent between